Hey, it's Glipi. Did you know that marketing has both variable and fixed costs? Today, we will discuss the marketing and administrative expense budget. This budget outlines the costs needed to support projected sales, including both variable and fixed expenses for selling, distribution, and administration.
Yes! First, let's talk about the variable marketing costs. These change depending on how many products we sell. The first item is the sales commission. Every time we sell something, we give commissions to our sales team. Since we plan to sell 8,000 units, we need 314,000 for this. Other marketing costs are spent on ads, promotions, and materials. That's another 160,000. So, when we add them up, the total variable marketing cost is 474,000. But wait, what about the fixed marketing costs?
Great question, Miss Chelchel. As for the fixed costs, these are costs that stay the same no matter how much we sell. This includes the salaries of sales teams, which amount to 115,000 pesos. The cost to deliver our products is 190,000 pesos. Other fixed costs like utilities and rent cost 63,000 pesos. Altogether, our fixed manufacturing costs total 368,000 pesos. Wait, let me get my...
Ooh, Glipi! Is that our magic calculator?
Yes, it is our magic calculator. So if we get the total of our fixed and variable marketing costs, we will get a total of 842,000 pesos.
Yes! That covers all our marketing costs. But, Glipi, is that the only budget we need?
Nope, Miss Chelchel. We also have administrative costs, which are expenses related to running the business, like office salaries, legal fees, and utilities. Unlike marketing costs, there are no variable administrative costs because these examples don't change with production or sales volume. For administrative costs, first, we have salaries which total to 266,000 pesos. Computers, softwares, and tech support cost 100,000 pesos to keep the system running. Moreover, the legal fees for contracts, compliance, and business production requires 180,000 pesos. Another deduction is the office depreciation since buildings and equipment lose value over time. We account for 96,000 pesos. We also pay 150,000 pesos in taxes and 26,000 pesos for other office expenses. Adding all of these together, our total fixed administrative costs amount to 818,000 pesos.
Whoa! Now let's add up all our marketing and administrative costs. For marketing costs, we have 474,000 for variable and 368 for fixed, bringing the total to 842,000. And of course, we add our fixed administrative costs of 818,000. That brings our grand total to 1,660,000.
Well, that's a huge part of our budget. This ensures that we have enough money for promotions, salaries, and running the business. But wait, there's more to budgeting.
Wow, we've already learned so much about budgeting, but there's still one more big question. How do we manage our cash to make sure we have enough money to run the business? To help us understand, let's welcome our friend, Shamel.
Hi friends! We've covered a lot of important budgets so far, but there's one more crucial piece, managing cash. That's where the cash budget comes in. This budget utilizes the operating budget prepared to identify cash receipts and cash disbursements for the period budgeted, helping the company plan ahead and ensure they have enough funds for operations, investments, and even growth. Now, let's check out Company's X cash budget for 2026. Let's start with the money coming in. Company X started with 500,000 cash at the beginning of the year. But before we check how much we'll spend, let's first look at how much cash we expect to receive. Based on other relevant information, Company X expects to receive 6,500,000 from customer collections. Not only that, an asset worth 450,000 that is depreciated by 400,000 is also being sold for its net book value. So that would be another 50,000 pesos. Which brings us to a total of 7,050,000 cash available. Adding all of that to the beginning cash balance, we get 500,000 plus 6,500,000 plus 50,000, giving us a total cash available of 7,050,000. Now that we know how much total cash is available, let's move on to where this money will be spent. Cash outflows are the payments we need to make for operations, investments, and other financial obligations. Using the data computed by the previous group and other relevant information, we can now begin. Remember that this is only for cash transactions. Based on the raw material purchases, this amounts to 1,858,800 after deducting 18,000 pesos, which is expected to be acquired using payables. Direct labor costs, which is the amount paid to workers directly involved in making the products, totals 1,148,000. We can also take the amounts they've computed using the budgeted manufacturing overhead and the budgeted marketing and administrative costs. Deduct the non-cash expenses like depreciation, giving us a total of 792,400 and 1,564,000. Other payments include the company's tax obligation, dividends, the current portion of their long-term debt, payment for new equipment, and the payment of interest on their loan. We now have 6,405,600 as the company's expenses for the year. Deducting that to the available cash gives us a total of 644,400.
Whoa, that's awesome! So even after all the expenses, Company X still has 644,400 left. That's great! A positive ending cash balance like this ensures that the company has enough cash to cover unexpected expenses and maintain smooth operations.
And that's how we manage cash through a cash budget. But how do we know if the company actually made a profit?
Great question! To find out, we need to check the budgeted income statement. And to help us understand, let's welcome our next friend, Lira.
Now that we've laid the foundation, let's move on to an exciting aspect of budgeting, generating the budgeted income statement. This statement is essentially a translated endpoint of the operating budget, showcasing the projected net income for the budgeted period. It is computed like a regular income statement, except using the amounts from the budgets we've computed. Thus, we start with Schedule 1, taking total sales and deducting the amount from Schedule 6 or our cost of sales, giving us a gross profit of 2,800,000. From this amount, we can deduct 1,660,000 in marketing and administrative costs computed in Schedule 7, giving us the net operating profit. We can also remove or add non-operating expenses and revenues. For our case, this is the interest on the loan. Deducting that from the net operating profit gives us 1,089,600 pesos. Lastly, we compute the taxes due, which is 30% of the total net income before taxes, resulting in a net income after taxes of 762,720.
Wow, that was awesome looking at the income statement. We saw how much money a business made and spent. But guess what? There's still more to explore.
We're diving into the last budgeted financial statement we need to prepare, the budgeted statement of financial position. And guess what? We're not doing it alone. We have some awesome friends to help us. Say hello to Prince and Catherine.
Hello, friends! The budgeted statement of financial position is like a snapshot of our business's financial health at a specific point in time. It shows what we own, what we owe, and what remains for the owners. And guess what? Total assets must always equal total liabilities plus total equities. This is called the accounting equation. From our cash budget, our total ending balance is 644,400. Accounts receivable, where we started with 250,000 pesos, adding the total sales which are on account of 6,800,000 pesos, and deducting total collections of 6,500,000 pesos, bringing our balance to 550,000 pesos. Inventories, taking the ending materials inventory and multiplying them by their unit cost, and adding the finished goods inventory, brings our total to 762,000 pesos. Other current assets like prepaid expenses still amount to 20,000 pesos. We now have 1,976,400 pesos in total current assets. As for non-current assets, we have the property, plant, and equipment. We started with 2,650,000 pesos, sold equipment recorded at 450,000 pesos, and replaced it with a new one costing 500,000 pesos, allowing us to get 2,700,000 pesos. Along with it comes its contra-asset account, a non-cash expense called depreciation. Accumulated depreciation began at 950,000 pesos. We added 290,000 from the fixed overhead, 96,000 from office building and supplies, and removed the depreciation of the old equipment of 400,000 pesos, giving us 936,000 pesos. We compute the total non-current asset by deducting accumulated depreciation from the property, plant, and equipment, giving us 1,764,000 pesos. We can add this amount to total current assets, which provides us 3,740,400 in total assets.
Next is our liabilities. Accounts payable started with 130,000, and due to the additional material purchases, it went up by 18,000, making out 148,000 pesos. Taxes payable started with 136,000, adding our provision from the income statement and deducting the 274,000 we paid, we get 188,880. Long-term debt still amounts to 430,000. Thus, with these values, a total of 766,880 arises as the company's liability. For the total equity, we have the share capital of 854,800 and the retained earnings, which started at 1,500,000, increased with our net earnings of 762,720 and decreased with the dividend payment of 144,000. We can now take these values and sum them up to get the total liabilities and equity, which should balance the total assets. And tada!
Nakasubscribe ba kayo kay Miss Chelchel pati kay Glipi? Parang tinapanood kasi yung video about Master Baba. Actually, parang kamukha niyo yung friends nila doon.
Pero oo, din, nakasubscribe ako. Actually, naka-31 ko yung monthly pay ko. Kaya updated ako sa
Napanood ko rin yun. Pero di ba meron pang iba na budgeting approaches?
Eto na nga. So, the first alternative budgeting approach is zero-based budgeting. So, basically, from the term itself na zero-based, the budget starts from zero with each budget period. So, instead of carrying over yung budget last period, each expense requires justification. So, it focuses on cost efficiency and eliminating unnecessary expenses.
Yes, true. Meron din tayong activity-based budgeting. It starts by determining the expected level of output, then we group similar activities to allocate cost accordingly. By analyzing cost at activity level, organizations gain a clear understanding of cost behavior, facilitating a more informed decision-making.
Hindi lang yan. Meron din tayong tinatawag na Kaizen budgeting. Kaizen is a Japanese term which means continuous improvement. In budgeting, its function is gradual cost reduction and efficiency improvement over time. It assumes that costs should be decreased each period due to process improvements. And as a result, budgeted cost is often lower than the preceding period.
Oh, ganun pala yun. Ang dami palang ways sa budgeting, no? Pero parang may di pa tayo na-discuss.
Oo, alam ko mayroon pang static at flexible budgeting. Alam niyo ba yun?
Sakto! Para mas malinawan tayo, let's call our friend.
Friends, let me help you with your problem. So, I'm going to discuss yung other two types of budgeting, which is yung pinalpiwan ni Ma'am kanina, yung fixed or static budgeting and yung flexible budgeting. So, yung fixed budgeting from the root word itself, fixed meaning hindi siya nagbabago regardless if meron change in production volume or expected sales. Like, yung kanina, yung 8,000. So, what if hindi lahat yun nabenta or what if hindi lahat yun na-produce? Sa static budgeting, hindi natin pinapakalaman kung hindi yun lahat na-produce or di lahat yun nabenta. Basta i-base natin yung actual cost incurred natin sa budgeted natin. So, While sa flexible naman, since flexible siya, gumagawa tayo ng budgeted cost based sa different level of production. Like yung kanina nga, if hindi natin na-achieve yung 8,000 expected sales, gagawa tayo ng other budgeted cost. So, assume that the sales budget of Glipi company calls for the production of 12,000 propeller hats. The variable overhead budget that has been set for this level is shown below. So, budgeted production propeller hats in units, 12,000. And indirect materials, 3,000. Indirect labor, 1,500. And electricity, 2,500 for a total variable cost of 7,000. So, suppose that the company was only able to produce a total of 10,500 propeller hats during the month of January. Actual costs are as follows. Indirect materials, 2,800. Indirect labor, 1,400. Electricity, 2,200. So, with the given information, to build for static or fixed budget variance and flexible budget variance. So, unahin natin yung static or fixed variance. So, since yung budgeted production units natin is 12,000 and yung actual is 10,500, meron tayong variance na 1,500. So, unfavorable yon. Bakit siya unfavorable? Di ba usually, pag mababa yung actual and kesa sa budgeted, that's favorable. Pero kasi, production to. So, the less you produce, the less profit na ma-earn mo. So, next naman, sa variable cost, since sabi ko nga static siya, hindi nagbabago yung budgeted cost natin kahit na hindi mo na-achieve yung 12,000 na units produced. So, yung actual cost natin, i-compare pa rin natin sa budgeted natin na una, which is 3,000, 1,500, and 2,500, giving us this variance. So, since mas mababa yung actual cost natin kasi sa budgeted, favorable let's say. Then, next naman, flexible budget performance variance. So, dito, kailangan muna natin kunin, dito, mag-aalat tayo, kunin natin yung budgeted cost based dun sa 12,000 na based on actual units. So, sa 12,000 na yun, since 10,500 lang yung na-produce, kukunin natin yung budgeted cost for that 10,500 produced. So, muna, kukunin natin sa budgeted indirect materials. So, yung 3,000 na cost, di-divide natin sa 12,000 units na expected natin, makukuha natin yung 0.25 per unit. Times natin yun sa 10,500 na actual produced. So, yun yung budgeted natin based on actual units. Doon natin i-compare yung actual cost natin, which is 2,800, giving us a variance of 175, unfavorable since mas mataas yung actual sa budgeted. So, same lang din sa other, i-divide lang din natin yung mga cost sa budgeted units, dito rin. Then, ito times sa 10,000 na actual units produced, giving us this variances. So, if mapapansin nyo sa flexible and static budgeting, nagkakaiba sila sa basis of comparison. Usan natin i-compare yung actual units natin.
Now we know what a business owns and what it owes. Super cool! And we couldn't have done it without our amazing friends. Let us all say a big thank you to our friends and everyone who helped us today.
Well, that was so much fun learning about all of these budgeted financial statements. You did an amazing job.
Yes, I am so proud of you.
And before we go, let us all say a big thank you to our awesome friend, Miss Chelchel.
And let us say thank you to Glipi for learning with us today.
See you next time. Bye-bye!